Apple, now the most valuable company in the world, has seen its shares more than double from March lows. Technology giant made history on Wednesday after it touched a stock market value of $2 trillion, making it the first U.S. company ever to achieve the feat. Shares of Apple, which touched a market capitalization of $1 trillion 2 years ago, briefly rose to a high of $468.65 yesterday, taking its market cap to $2.004 trillion. This makes the Cupertino-based company the 8th largest nation as equated in terms of GDP, higher than the likes of Italy, Brazil, Canada, Russia, South Korea, Spain, and many more. While the world's biggest oil company Saudi Aramco was the first to touch a market cap of $2 trillion in December last year, the global economic turmoil caused by the pandemic and a subsequent plunge in oil prices eroded its valuation. Apple, therefore, is the richest company in the world in terms of stock market value, followed by Amazon and Microsoft and Google. The company's exponential rise comes at a time when U.S. technology stocks have witnessed a sharp rally. Apple's stock has surged sharply by almost 57% this year, enabling it to overshadow Saudi Aramco as the world's most valuable listed company. The fresh rally in Apple stocks despite the economic slowdown is a sign of growing investor confidence in Apple. The company seems to be diversifying further and focusing more on services for users like video, music, and games. It may be noted that Apple now accounts for close to 7% of the total stock market value of the S&P 500, and its market capitalization is also equal to the combined values of S&P 500's 200 smallest companies. Though analysts lauded Apple for its rising value, they are of the view that reaching the next trillion will be a major challenge for the company. According to market watchers, the recent rally in Apple's shares has left overvalued and could lead to a period of stagnation. But whether its value will rise further will also depend heavily on what innovations the iPhone maker plans to offer to the world in the future. Apple stock is now trading at an all-time high valuation. Enterprise value to sales (EV) sales ratio is 7. That means that Apple's current price is equivalent to 7 years of sales. Investing at these high valuations is speculation and not investing. The Apple mania is running wild. Apple is ridiculously, screamingly, expensive right now, and I don't have to statistically back that up. It's staring you in the face. Apple is a $40 stock. Take its cash balance of about $200 billion, divided by the number of shares outstanding around 5 billion. Everything else is hype. This market makes no sense. 2020 has been the worst year in America in my lifetime, yet the markets continue the upward path that started at the end of the second year of Obama's first term and has no end in sight. Runs like this did happen if you recall the internet stock boom in 2000. People are buying up stocks with no other reason than they were going up. Then there was a drastic crash after the valuation of these companies came out. Better to pop the bubble and take the pain now while the consequences will be at least sort of manageable. But if it gets any bigger, the results will be even more disastrous, as will the attempts by the government to prop it back up. I know a crash is coming, and I just want to get it over with. The longer and harder the Fed fights to keep this bubble afloat, the worse the eventual collapse will be. Frankly, I'm amazed at how self-sustaining this bubble has been thus far. Apple is now worth as much as Italy's GDP. Welcome back to the Atlantis Report. You are here for your daily dose of the truth, the whole truth, and nothing but the truth. Please take a second to smash that like button. And as you know, friends, I rely on your donations to keep this channel functional. As you know, it takes a crazy amount of research and time to bring you this content on a daily basis, so I hope you consider helping with whatever donation you can afford. Thank you. As the market capitalization of Apple Inc. rose past the $2 trillion mark on Wednesday, and the company's value soared to more than the GDP of a host of countries, including Italy, Brazil, Canada, and Russia. Apple, the company led by Tim Cook for 9 years now, reached a market valuation of $2 trillion in intraday trading Wednesday, the first U.S. company to hit that mark, after doubling in less than 5 months. It took Apple 42 years to reach the $1 trillion market capitalization, but only 5 months to double. The Cupertino, California-based company's shares briefly rose as high as $468.65 on Wednesday, giving it a market capitalization of $2.004 trillion, and surpassed the GDP of countries such as South Korea, Spain, Australia, Mexico, Indonesia, the Netherlands, Saudi Arabia, Turkey, Switzerland, Taiwan, UAE, and Norway, among many others. How crazy is the world which is blindly chasing such overhyped, less value for money Apple products? The Apple stock has exceeded $2 trillion in capitalization, a real record for the American giant. A peak expected by investors, given that for days there was a lot of attention on the group led by Tim Cook. As indicated by the MF Dow Jones Agency, Apple has shown strong momentum this year. The stock has averaged a daily gain of 3.5% since the beginning of June, according to data provided by FactSet, and its activities have been surprisingly resilient in the face of the coronavirus pandemic. At that level, stocks are trading over 32 times the earnings, or 31 times, excluding the $81 billion net cash on the company's balance sheet. All thanks to a sharply rising balance sheet, given that the latest figures released indicate a 10% increase in revenues on an annual basis in the quarter ended last June 27, with the stock showing growth of more than 20% since the publication of those results on July 30. The stock market value of Tim's group now represents a global reference benchmark also because Cupertino actually represents a real independent nation in terms of market valuation. With the milestone reached today, in fact, Apple has a market cap that is higher than the GDP of Spain, $1,940 billion estimated by the International Monetary Fund in 2019, and that of Canada, $1,899 billion. In this sense, it can be said that the Apple state is in 15th place overall on the world scale, behind South Korea $2.319 billion. On Wall Street, Cook does not seem to have any problems whatsoever, but it is on the operational and industrial front that a front that should not be underestimated has opened for days. Video game developer Epic Games sued Apple and Google after the two companies decided to remove the Fortnite game, one of the most downloaded globally, from their app stores, explaining that the developer had tried to circumvent their payment systems. Specifically, Epic requested a restraining order against Apple to prevent the removal of the video game. Apple says that it is responsible for 2.4 million U.S. jobs, and estimates it will contribute $350 billion to the U.S. economy by 2023. The vast majority of those jobs are at one of the 9,000 U.S. suppliers that make everything from testing equipment to specialized parts for Apple's products. There is little doubt that we are in the mania stage of the bull market. In this phase, value is grossly underperforming growth. To keep up, we are accepting of the risks embedded in inexpensive stocks such as Apple. We do this, however, with full knowledge of the risks and employ tactical risk management strategies. Apple has the major following issues with saturation as well. 23 million U.S. job losses and worldwide a lot more, an estimate of 190 million. The market capitalization of $2 trillion is indeed too big. Price-to-earnings ratio of 25, but with a drop in earning, it may be much higher, around 40 plus. 15 to 30 billion in unpaid EU fines, back taxes, and interest. Average selling price is to sink, reducing margins. Future has drained its cash buying back shares but added debt of 136 billion. Lack of institutional buyers, better values in the rest of the market. Taxes roll back next year. No more Ireland accounting gimmicks, allowed in EU. A global pandemic and record levels of unemployment might impact iPhone sales. Apple is one company that if it were to disappear, nothing would be missed. I still don't know why people even use Apple products. Central banksters have been propping traders for well over 10 years now. Apple is a chosen company. So the central banksters print and bid. It's difficult to fail when a corporation is bid by a bottomless pit of cash. I've come to realize it doesn't matter anymore. 26 trillion in debt and climbing means nothing. Zero interest and nowhere to go means nothing. Pandemic with staggering unemployment means nothing. 50, 100, 500, 1,000 times earnings means nothing. Riots in the streets, civil unrest, California on fire. Category 4 hurricane on the way means nothing. I've come to realize that the market isn't based on valuations anymore, and until the next Great Depression, I don't think it will. It seems like anyone with money will put it in the market and just keep inflating it up. I don't see an end in sight. It's become an easy way to make money, and nobody cares about value anymore. As long as the Fed is controlling the market, nothing surprises me anymore. When this heroin-induced high is over, watch out. The alternative is we face reality. Interest rates will need to go up to combat inflation. That means housing will take a hit, and stock valuations will come down. Taxes will need to go up to pay for all this printing. Fun times. Apple has reduced its shares outstanding by over 20% since the end of 2017. It had 5.4 billion shares outstanding back then and now has 4.3 billion shares, and despite this massive reduction in share count, it has still only managed to keep earnings at the flatline for the last 3 years. In essence, earnings per share have declined by about 17% a year since 2017, but the market has rewarded this dismal performance of declining earnings and flat revenue growth by making it the most expensive company in the world. Apple has about $28 billion in cash on the balance sheet. The rest is short-term investments, accounts receivable and plant value. Flat numbers can be deceiving. Apple is nothing more than a bloated Momo stock with severe levels of debt and a shrinking cash hoard, but a wildly inflated price. If you want to buy a company that is clearly in decline, then overpay for Apple. I'm sure the end result will be exactly what you deserve. This was the Atlantis Report. Please like, share, leave me a comment, subscribe. And please take some time to subscribe to my backup channels. I do upload videos there too. You'll find the links in the description box. You will also find a PayPal link if you want to make a donation. Thank you wholeheartedly to all those of you who have already donated. Stay safe and healthy, friends.